Hi there, folks. This is Mitch Firestone, and I am pleased to be with you here today to introduce you to stock charts. What you're looking at in them, what are the components of them, and of course to then use that as the springboard to eventually start to take you into a deep dive into price action. Obviously, when it all comes down to it, making money in the markets comes down to the very simple maxim: buy low, sell high, or in the case of shorting, sell high and buy it back low and pocket the difference. And so, what I want to do here, along with my partner Ryan Nocera, is we're going to give you a brief introduction for those of you who are not familiar with charts, in order to essentially expose you to what we refer to as our alphabet. In the same manner that in language and communication, obviously, you start out with letters in an alphabet, and then you go to words and phrases and sentences and paragraphs and et cetera, et cetera, et cetera. The elemental building block of it, of our charts is the particular style of chart that we use. And so what I want to do is take a few minutes here to essentially introduce you to our alphabet. So what we're looking at right here is a chart of Facebook, okay? And if you look in the upper left-hand corner here, you can see that it says it's a daily chart of Facebook. And what that means is that this is essentially charting essentially a single data point for Facebook, and that is its closing price each day. So I'm talking to you from New York City here in the Eastern Time Zone. So the market here rolls from 9:30 a.m. Eastern to 4 p.m. Eastern Time. And so what you're looking at here is what's referred to as a simple line chart. And what this is really doing is connecting the 4 p.m. closing price of Facebook each day, okay? And so what we're looking at here is on the horizontal, on the x-axis, we are looking at this is the time dimension of the chart, and then right here, of course, on the vertical y-axis is the is price. So right now, as you can see, the market is in fact rolling, and so Facebook is sitting at around $190 and change per share, and so that's where we are now. On the other hand, if we looked, let's say, a couple of days ago, I'm just going to throw this line here. You can see right here that in fact right there, price on the 24th of June, the closing price of Facebook was about $192.60 some odd cents. Okay, and if you can see, as I move this thing over from day to day, you can see it's 4 p.m. And each day there is a closing price, and so that's what this chart is showing you here. Okay. So there is one single data point here, okay? And this chart is certainly useful because what it does is you can see that there are, in a sense, plotting, if you can see that there are significant turns in price, and you can kind of see where these sort of swings in price happen. Obviously right here there was a sort of a low. You can see that there was a major swing up here. There was a major swing down. There's another major swing up, and so this is a very simple but yet very useful. Very useful chart. Okay, so this essentially is the most elemental of charts. Okay, there's a minimal amount of data. It's one particular piece of data, and again, that's its closing price. Okay. Now, the other thing about a chart is that you can have you can basically have a chart cover any sort of time period you want. And so as a result, this is a daily chart of Facebook, okay? And if I would simply block out let's say where we are now, and we're basically right at the end of the second quarter of the year. Once trading is done today, in fact, exactly one half of the year will have concluded here. So if I basically throw this line here and this line right here, okay, well basically this is the full year of Facebook here, okay, and essentially there are approximately 126 data points. There's approximately 252 trading days in the year, and so in fact, if we would actually count up the number of data points that are in this chart, there would be approximately 126, because this is exactly one half of a year, okay. However, one can basically take a chart and change the time frame either up or down in order to essentially take a bigger picture view of the chart, or to put a finer lens on the chart if you drop the time frame down. So if I would bring this up, let's say to a weekly chart, okay, well then the weekly chart, okay, would look like this. And so in between now, here's those same two lines. Well, now we've gone from basically 126 data points. We've now brought it down to approximately 26. Okay, because that's basically, obviously 26 weeks is half a year. Okay, so in this case we essentially widen the lens. Okay, so if I bring this thing back to the daily, okay, here's where we were before. On the other hand, we could now put a finer lens on this and essentially change this from a daily chart, and we can change this to a 1 hour chart. And if I did that, then essentially we would go from 126 data points to basically multiply that by 7, because essentially, since the market rolls from 9:30 to 4 p.m., there are essentially 6 60-minute candles. There would be 6 1-hour candles in the day, and then, or 6 1-hour periods, and then there's that last 30 minutes to correspond to that last half hour of trading. So essentially, you're going to go from in Facebook, you're going to go from 1 data point to now 7. Okay, so if I do that and I change this to a 60-minute, and I kind of just scrunch this down just a bit so we can fit everything in here. So right here, this is all that price action that occurred during the year, and so we've looked at it in terms of a daily chart. We looked at it from a wide angle on a weekly, and now we've essentially looking at this as a 60-minute chart. Okay, but this is all presenting the same data, except with either greater or less frequency. Okay, so that's what we're looking at in terms of when we talk about the time frame of a chart. Okay, and we'll see that also in a sense in a clearer way when we actually start to look at a different alphabet, which I'm about to introduce to you now. So again, this is what's referred to as a line chart. Okay, so let's go back to this. So that's one way of presenting price action, and that's in a line chart. Okay, well, at some point people realize, okay, well, it's all very good to have the closing price, but within a day, or within any time period of trading, in fact, there are actually other points of data that have relevance and interest. Okay, because there's the closing price, but of course there was an opening price, and then there was all the price oscillation during the day, going up high and low, and so essentially all of that has relevance. And so in a sense, just to talk about a closing price is really more of a summary, but really is really lacking in any sort of detail. Okay, so at some point then, people went from talking about simple closing prices, and they kind of then went to something else in order to provide greater detail. Okay, and so what we're looking at here now on the right side, we're looking at this the line chart, And if we look to the left here, you can see that effectively, essentially what we have is the same exact price movement of the chart. You can see that this kind of reflects the same exact ebb and flow. But you notice now that obviously this thing looks very different. And so what I'm going to do is I'm going to kind of quickly blow this up and just take a really quick look at this and kind of show you what we're looking at here. So if you notice right here, this is what's referred to as a bar chart, okay? And each of these bars, in fact, have not just one data point, like what we looked at in the line chart, but in fact they have 4 distinct data points, okay? And the 4 data points represent is on the left, okay? First of all, the simple part is you have a high and a low, okay? So obviously the top of each of these bars represents the high price. So for the one that I'm pointing at here, in fact, what I'm going to do is I will put on this little tool right here. And what this lets you do is actually kind of look at the data for each of these candles, or each of these bars in this case. So if I point at this, what this is telling here is that the high point of this was at $171.68. Okay, the low part of this was at 165 even. Okay, and then if we look on this, if you notice these little ticks on either side of the candle, those represent the open and the close. So in the case of the U.S. stock market in the Eastern time zone, this represents the opening print or the opening price at 9:30 a.m. and this one is the closing price at 4. So in fact, this particular tick right here on the right side, each of these are actually the data points that are being connected on this line chart here, okay? Because this represents the closing price, okay? So that's what these ticks are on the right-hand side. And so these little ticks here, when you actually sort of isolate them and connect them, that's actually what you're looking at in terms of the line chart, okay? So, and then what you have here again is, so now you've gone from basically 1 data point on here to 4 data points here. And so again, each of these carries these 4 data points. And so again, so you have, let's say for the one that I'm pointing at right here on February 4th, and if I isolate that, then you can see that on that particular on this particular bar, the opening price was 165.70. Okay, then this thing closed basically pretty much at its high, because if you look very closely, you'll see that little tick right there on the right. So it pretty much closed right near its high at 169.25. But then the absolute high was actually a nickel above that at 169.30. And then the low, you can see, even though this thing opened here, presumably what happened during the day is that it first went all the way down, and then it actually eventually popped up during the day and pretty much finished up near its high. And so right here you can see it opened here at 165.70. It actually went down as low as 163 and change, 163.62, and then again it then traveled during the day and pretty much closed at its high. Okay, so now we've looked at a second alphabet. Okay, so the second alphabet now is this this bar chart. So again, we have one data point here, 4 data points here, and so that's another alphabet. Okay, and then another one that that exists, and I have to tell you, I am not going to go into the detail about this, but just to show you that there are other alphabets. What you're looking at here, this is what's referred to as a point and figure chart, and really, in a sense, it's more or less presenting the same, this kind of basically the same information here, but there's a different element of this, and I'll be honest with you, I don't even understand it, and it's something that, you know, and it's kind of an old school type of chart, and there's nothing wrong with it. I just don't use it. I've never really at this point taken the time to learn it. Okay, but again, if you look, you'll see that again, it's the same ebb and flow. Okay, it's presenting the same thing, and it's presenting a different form of information. So again, this is a third alphabet. Okay, so that's point and figure. So we got a line chart, we got bar charts, we got point and figure. Okay. So what I'm going to do now is I'm going to get rid of these two here, and I want to focus on the bar chart, because the bar chart in fact has a whole lot of real useful information. But in fact, what happened was and lots of people still use bar charts, but in fact, at some point during the late 18th century, in the late 19th century, over in Japan, Japanese rice traders, in fact, in a sense, independently, they invented their own version of the bar chart. But in fact, when they did that, they actually created it in a much more, I would call it almost like a much more elegant way. And so what they did was they basically created something where, rather than using these bars, they introduced sort of a color coding system. And so effectively what they did was they went from something that looked like this, and they went to something that looks like that. Okay, and so what you're looking at here is exactly the same as the bar chart, but in fact it presents the information in a much more elegant fashion. Okay, so what you're now looking at here is, this is where I'm actually going to take a deep dive into this now, to explain this to you, so that because this is going to be the basis for all of our charts here. So, but I will just kind of show this to you, and now if we kind of go back and sort of just summarize this. You can see now that we have, and in fact, we have now essentially a four alphabet system, and I won't bother bringing up the other one. But okay, but the other one, of course, was the bar chart that I introduced here. Okay, so these are the four different alphabets here. So what we're going to do now is we're going to take an in-depth look of the candlesticks here. Okay. And so what I'm going to do is I'm going to now kind of explain and kind of go through and sort of break down the anatomy of one of these candles, so that it's clear as to what the information that's being described. But remember, what you're looking at here again is exactly the same as this that I described before, these bar charts here. And again, what we have with these four pieces of information, an opening price on that little left tick, a closing price on that little right tick, and then the top part, and the bottom part, which describes the high and the low of the range. Okay, so that's what we're looking at here, but we're looking at it in a different way here. Okay, so what I'm going to do here is I'm going to isolate this candle right here, because it happens to be conveniently, it's a single individual candle, and so that makes it easy to kind of talk about. So right here we have this candle right here, okay, and this green candle. And again, just to show you now an example, before when we talked about the time frame, so here's a daily chart here. Okay, if I break this down into a 60-minute chart, okay, well then that one candle now becomes the 7 candles that I mentioned before, because now you have your 6 60-minute candles, and then that last candle it really turns out to be a half an hour, a 30-minute candle, because of that last odd half an hour in the 6.5 hour trading day. And of course, if I would turn this into a 15-minute chart, well, then essentially I would end up with 26 candles. Okay. And so right there, there's that. And so you basically went from that one green candle, okay, and that one green daily candle, if you look at this in a 15-minute chart, and you can see that up here, that expands out into all of this, okay? So what I'm going to do now is, so that shows you again the relationship between the time frames. So what I want to do now is to actually kind of get into the anatomy of a candle. And so here's a little diagram that we put together here. And so, unlike the bar chart, if you recall with the bar chart that I showed you, where there was that little left tick that corresponded with the opening price, and that little tick on the right side of the bar that corresponded to the close. Frankly, those are a little pain in the neck to look at. They're kind of small. They really don't highlight anything, and they're kind of annoying. So the Japanese rice traders, in their infinite wisdom, came up with this system that is really kind of elegant, as well as it actually allows you to essentially plot things in a chart much easier. So what they did was, again, you have the same exact pieces of information, but what they did was they introduced a color coding system in place. And so what we have here is two different candles, okay? So if a candle is red, okay, that would mean that designates that, in fact, the candle from its closing price to its from going from its open to its close, the price actually fell from the open to the close. When that happens, that's considered to be a red candle. Sometimes it's presented in a chart, if it happens to be kind of a monochrome or grayscale chart, that's oftentimes presented as a black candle. And in the case, okay, and then when you have a candle that's opens and finishes higher at the close, well, then that's presented as a green candle, or again, when sometimes if you see sort of a grayscale chart, then that will oftentimes kind of be presented as kind of a white simply an open candle, kind of just a black frame with and white inside. So again, the grayscale will oftentimes be this would be kind of a black candle, which would represent the red candle, and again in the grayscale that would oftentimes this would be sort of just an open a black frame and then white. So, but either way, so this is an open. So this is a green candle, okay. And what happens is it opens here, it closes here, but in fact it then has a high and a low, okay. And then there will be cases where if it happens to open and doesn't go any lower, then there won't be a wick that comes down here. There won't be this tail, because if it opens and this goes straight up, well, then this never occurs, okay? And again, each one of these candles can correspond to any sort of time frame. So if this happened to be a daily chart the way it is here right now, okay, this candle corresponds to at the open at 9:30, okay, for the daily in this daily chart, okay, and then right here this is the close at 4. But then for all the hours in between, okay, here was where it traveled on the high side, and here was where it traveled on the low side. Okay, so that's in a daily chart. Okay, on the other hand, this green candle could have just as easily corresponded to, let's say, a weekly chart, in which case this would embody an entire week of trading. Okay, well, in that particular case, then the open would be here at 9:30 a.m. on Monday. Okay. And then the close here would be 4 o'clock p.m. on Friday. Okay, so that's what this would represent on a weekly chart. And on the other hand, if this happened to represent simply 5 minutes of price action, okay, if this was a 5 minute candle, well then this could hypothetically have been a candle, let's say, that opened at 10:05 a.m. okay, in the 5 minute time frame, and then if that's the case, then it would have closed at 10:10 a.m. 5 minutes later. Okay, so that's the anatomy of a candle. Okay, you have an open, a close, a high, and a low, and in the green candle, the open is below the close because essentially it closed higher. Okay, in the case of a red candle, everything I just said to you about the green candle applies except the opposite with respect to the open and the close. In the case of the red candle, it opens higher and it closes lower. Okay, but everything else that I just talked about in terms of time frames and everything, that applies. In terms of terminology, okay, the main bar here, okay, this is what's referred to as the body. Okay, so this is what's referred to as the body, and then these extensions on the top and the bottom, they're often referred to as wicks. And in the case of the bottom wick, it's also sometimes referred to as a shadow. Okay, and then of course the reason that these are called candlesticks is, forgetting about the bottom one here, if you just kind of looked at this one here and you looked at let's say this candle, and then you look at that top extension wick, well, that obviously looks like a candle. And so that's why in the Japanese rice traders, these ended up being called candlesticks. So at any rate, that's the anatomy of a candle. Okay, so you have an open, a high, a low, and a close, just like in the bar chart, and then it consists of essentially kind of two components: a body and then wicks. And again, you do not have to have wicks, and in fact, even in a chart, depending on how the price action is, you really don't even you can actually end up in a situation where you have kind of like almost like a minimal or virtually even no body. Like for instance, like let's see if I can isolate one. Here we go. So if you look at this one right here, okay, well, what went on here? Okay, well, in this particular case, this candle opened at the top of this very short red body, okay, and I don't know in what order this happened, but one of two things happened. Either it kind of blipped below very briefly and then went all the way up to the top, and then all throughout the day, price just kept drifting lower and lower and lower, and it closed just a couple of pennies probably right below where it opened. Okay, so that's what went on in terms of the story of that. So again, if you notice, if you look at that candle though, it's got virtually no body. It's all wick. Okay, on the other hand, you can have other candles which are virtually all body, because essentially what that means is that the candle kind of very strongly trended and never really reversed a whole lot during the day. So here's an example of that right here. Okay, here's a candle. It opened right here. It kind of pulled back maybe a few pennies just at the very beginning of the day, and then basically throughout the day just kind of, more or less, went up, and then it kind of went up, and then it reached that peak, and then it kind of gave back, a bit of it, but really not a whole lot. So this thing basically finished, probably like within 5%, if you look at if it's range from here to here, from 0 at the bottom to 100% at the top. This basically finished, pretty much within the top, probably 5% of its range for the day. Okay, that would actually would be referred to as a very bullish candle. Okay, in fact, here's another example right here. So right here, this candle opened here, went all the way down there, but then finished strong throughout the day and finished virtually at its peak. Okay, you can see there's just a little hint of a candle, of a wick sticking out of the top there. Okay, but really for all intents and purposes, this pretty much closed at its high. Okay, so this is what's referred to as a very, very bullish candle. Okay, so at any rate, so that's it. And what we're going to do is obviously, we accompanying this video, we'll actually share with you some of the screenshots that were presented in here, and then very specifically these these particular slides that we were just going through. We will share all of these with you, and in fact, we also have a couple of the ones that are actually kind of highly detailed here, that actually kind of go through the particulars of of the candles. Okay, and so it kind of goes through the whole narrative there. Okay, so at any rate, that's what I got, and in the next video, what we're going to do is we will then actually kind of give you an introduction to how price action fits into the whole scheme of learning to trade and learning how to formulate and create trade setups. And then once we're through with that, we will then begin a deep dive into the particular style of trading that we use, the particular lens that we use to look at the markets. So at any rate, that's what I got here. This is Mitch Firestone, and look forward to working with you all. Thanks a lot. Bye.